In this video, we'll cover the only 3 questions that exist in trading. I know that's a bold statement. Now, for those that are a little bit more advanced or are trading a system with conviction, this will be a video that will be definitely kind of a reminder, an upkeep, so to say. For those that are struggling with trading, maybe you don't have a trading system that you're trading with conviction. Maybe you're still recovering from a loss. Maybe you're in the crypto market, for instance, and you're down quite a bit, and you're trying to figure out, how do I then create a system that this doesn't happen again? Whatever it may be, these 3 questions and what I'm going to discuss in this video really is to provide you with a foundation to build your trading system around, to not make it overcomplicated, to just focus on simplicity. I'm not going to have you wait for these questions. We're going to cover it relatively soon in this video. The great thing about these 3 questions is that one of them is already answered. So you really only have 2 questions you have to answer. We'll get to that here in a second. So first up, this video will be in some charts because I want to provide some examples about what we're talking about. And I'll get to the charts and I'll just overlay what indicators and stuff we'll start adding. But let's talk about these 3 questions. They're going to be so simple, you're going to discount them, and you're going to say, how can I possibly build a trading system that's highly effective around them? Well, it's real simple. And this is basic, but it's, where is price going? Where is it coming from? And how does it want to get there? If you design a trading system, and actually I would say this, every time I look at a chart, and I do algorithmic trading, I do all types of trading in different markets, these 3 questions are the core. I'll relate this to something in marketing. I learned long ago in marketing that there's one question that you can ask that will make everything you do thereafter in marketing highly effective, and that is why. If you know your why, if you know the why you're in business, if you know why you're serving your customers, if you know why you're doing something, and you can define that, then creating anything thereafter is a lot easier because it all comes from that foundational why. It's the same thing here with trading. If you design a trading system around these 3 questions and answering these 3 questions in a very systematic, high probability way, you will have a trade system that you can trade with conviction. And I've been getting a lot of direct messages. I've been getting a lot of just questions, and I've kind of seen this common thread throughout them, and it's over complexity. And the over complexity is not grounding your trade system in these key ideas or key questions. And I'll just give you a very clear example of this. So let's jump into the chart. You're already seeing it anyways. We're looking at BTC perpetual futures contract, just what I happen to have up. The indicator you're seeing on the chart is the RexDog Average. Now, I'm going to mention my trading system here. I'm going to mention indicators that I use just because it highly relates to these questions about how I've defined these questions in my own trading so that I trade with conviction across multiple markets. And you'll see that very clearly here, as the RexDog Average for me is, and this is an indicator you can download on TradingView, you can add to your own charts. It's the yellow line that you see here in the chart. We're looking at the daily time frame. The RexDog Average for me is the first thing that I look at in a chart, any market. And for me, it is the bias indicator. It tells me what is the bias, the momentum bias of the market. Prices below the RexDog Average, the yellow line. These other lines that you see here, the green and the red, are ATR lines. Prices below the RexDog Average, which means that it is momentum short. Now, here's where we're going to get into the first question. And this is why, if you have one indicator that helps you define, or it doesn't even have to be an indicator. I'm going to take a step back. It could just be a naked chart, because I still trade naked charts just because I want to keep that skill up. But when I add indicators to it, I become much more effective. But when you're answering that question, you need to have some type of barometer that tells you where price might be going and what is the momentum of the current market. For me, that's the RexDog Average. You could take off the RexDog Average and just use chart patterns, candle patterns, and various other things. You can do that. You can use trend lines. You can do whatever you want. What is really important is when you first pull up a chart, can you immediately identify or have a system or a process that tells you where is price going. Now, the second question is where is it coming from? Helps you with that somewhat. But here's a real world example, or here's how this works in my trading system. We're below the RexDog average. The RexDog average acts as a magnet, similar if you use the 20 moving average, or you're using Bollinger Bands, for instance. It acts as a magnet. So when price is below it, my question is, where is price going? My question is, does price want to go up and recheck at the RexDog average to continue the momentum short? Meaning, does it want to stay short? Does it want to stay going down? And in that case, what would it do? It would come up here and retest the RexDog average. Now, we've seen over the last couple days on this chart, what has it done? And these have been very good trades on the short side. It has tested the lower ATR bands of the RexDog average. These are high probability trades I've been taking over the last, week or so, in addition to still being short from way back here. So these are, when I'm looking at where is price going, and I just pull up a chart like this, my immediate answer comes from something that I've built, that I rely upon, that I believe in the probability that it gives me an edge in the market. So when you say where's price going, of course you could say, hey, if I called you up every day at 8 a.m. and said, hey, X is going to close here at the end of the day, and if I did that and day after day you noticed I was right, you would start trading off that and you do very well. There's another reason, and I'll get into this, why when you answer these questions, it helps you define, where do I enter? How do I enter? How big do I size? Where's my stop loss? All these other questions. All these other things with trading, I should say. These questions answer all those. Because if you can answer all these questions with a probability within your trading system, then all those other questions are relatively simple. They really are. So let's move on to the next question. So I want to reinstate what I just said. When I look at a chart in my system, in the RexDog system, the one that I teach and the indicators that I'm building for, the RexDog average is the first thing you look at. It tells you the bias of the market on any time frame. It doesn't matter. We can go to the 30-minute. On the 30-minute, the bias is currently long. What is it trying to do? Well, we can just see here. When we were up here, it was trying to come in and say, does it want to remain long? But for the majority of the day here today, the bias of the 30-minute chart has been momentum long. It's looking to maybe check in with the RexDog average again to see if it wants to. Now, the verbiage I use is how I describe how the algorithm in the market works, because I don't care why any of this stuff happens. It's just the verbiage I use to explain what's happening in the market and how I can trade effectively. So it's currently on the 30-minute chart, momentum long. And where is price going? Well, in my trade system, this is a pay attention candle. This is a pay attention candle. This is a pay attention candle. Price has a high likelihood of going right now to at least the RexDog average, potentially to test this pay attention candle right here. That's in my trade system. To test this pay attention candle, and there's a high probability trade at this pay attention candle to go long at a certain point in this pay attention candle. So that's my next trade. I can just look at this chart with just this indicator on here alone and not have the other RexDog indicators and know, or not know, but have my trade idea or what I need to do in the next whatever couple hours defined. I don't need to think about anything else. This also defines where my stop loss needs to be. Now, this is where the other question comes in. Where is price coming from? Well, that helps you answer where is price going. Well, price is coming from up here on this chart. That's pretty obvious. That's the one question you can answer. But that helps you define, because what you want to do is when you answer that second question, which is the first question is where is price going? The second question, where is it coming from? Most people, most traders that I ask this question to don't have rules about where is price coming from. Meaning, this is data. This is information. Right here. This is information the market is giving you. This is real-time information, and if you want to trade in real time, or I shouldn't even say real time. If you want to trade, you need to go off the information that the market is giving you, especially if you want to just trade out off raw charts. If you want to trade off raw charts and indicators, this is the information that the market's giving you. So most people, most traders that I talk to, I should say, do not have rules for where price is coming from. And if you want to overcomplicate it, you could overcomplicate it enough to make a rule for every candle close if you really want to overcomplicate it. But you should have general rules around what happens where price is coming from and where it might be going to. So when price was up here, and I shorted this up here and I got out early. I got out here right at this, did this earlier today, right at this upper ATR band. I got out there. I should have just kept some trailing. When price was up here, I was basically I wasn't calling the bluff. I was fading this momentum move because it's momentum long. So I was fading into a short down to here. In my mind, in that trade, I was saying already price is coming from up here and price wants to go down here. But it stalled here on the tick chart, and I just thought it was going to bounce from here and go back up. It was a good trade. Why I'm sharing that is because I was already projecting where price was coming from, and I had rules to manage that trade, to stay in that trade. So price was coming from here, and I'll just share you a simple rule. There's a close right here. Real simple. Did price ever breach that? Absolutely. Did here? It did here. But what's a good rule? Well, I entered up here, which is a pretty good entry. This candle closed here. Pretty much the answer here was, if price ever closes above this close, then I'm out of this trade. Real simple, easy answer. So, and it was just based on one data point. One data point. My rule says if I have a great entry on a fade trade, because this is a fade trade, if I have a great entry, which is a great entry up here, right around here, if I have a great entry on a fade trade and I'm entered above the close of that candle, then really my rule says my stop loss is just above or just beyond entry, and meaning I don't believe in just putting your stop loss right at entry. I don't believe in just break-even trades. And I will, anytime during the day, if there was a close on the 30-minute time frame above this, I would get out of that trade. Simple. Didn't have to worry about it. In fact, I should still be in this trade, but I'm not. I'm not re-entering because my high probability entry has already passed. My next high probability trade, I'm just sharing this, is down this area here, somewhere around here. Not that big. That's way too big. Somewhere around here. It's my next high probability trade, and that's a long. That's my next high probability trade. Now let's change charts. Let's go to, I don't know, Tesla. Let's do Tesla. And let's just answer the next question. The next question is, so the first question you want to answer is, where is price going? The next, and let's do this since we're here together on this video. And you kind of get the rules of my trading system. Now, I'm using my trading system. Of course, you might have your own. Maybe you are adopting the RexDog trading system or portions of it. Great. Looking at this daily chart of Tesla, using my rules, what do you immediately see? Well, if you've just learned just a little bit in this video, you should say, well, price is below the yellow line, so it's momentum short. So the momentum trade is short. You're looking for short entries, but where does price want to go? Remember, I said it acts as a magnet. Well, we are above the lower ATR band, so there's maybe a close above this. So that's another point or another percentage in an upper ATR or a RDA test, I should say. So today looks like it's, I don't know, 11:23 a.m. my time, so the market still has half the day to go. It could close above the lower ATR band, but a close above the lower ATR band adds another percentage or a higher percentage in my trade plan, my trade system, that there is a RDA test likely. Still has to get through this pay attention breakdown candle, minor breakdown candle. The other target might be this other breakdown candle as well. Kind of aligns with the upper ATR band. But just looking at this, I immediately can answer where is price potentially going. I can answer where is it coming from. Obviously, it's coming from down here. It's coming from here. It's coming from here. I have various rules on this. There's a gap here. That gap held up. That actually is a positive in my trade system, that the fact that this gap wasn't tested, that this will continue based on my trade system. See, like I said, I have various rules that I've adopted, that I've tested, that I trade around, and that I believe in. So that's the other thing. These are conviction. Now, the final question here is, how does it want to get there? And this is where this final question, if you can define a trade system, if you can create a trade system that's defined around the core, where is price going? Where does it want to go? Of course, you already know where is it coming from. But if you can define a system that how does it want to get there, that's where the difficulty comes in. Because that's the one that causes stress for traders. How does it want to get there? Because let's say that in our trade system so far with Tesla on the daily time frame, we've defined that price through various systems, and I can add the RexDog system on here as well. If I add the RexDog system, we have even more trade confidence here. So those are the various other indicators in the RexDog system. It kind of reinforces our narrative that it's going to test the RexDog average at this point in time. Now we're half in the day. If I turn that off, just not to confuse things. When you're looking to answer that question, how does it want to get there? This is where it does become a challenge, because you have to have rules and a system that helps you define. If my system says that it wants to test this area with high probability, remember this is all probabilities. It sounds like I'm predicting the market. I'm saying with an 80% probability that it wants to go up here. There should be some percentage probability. How does it want to get there is, does it want to test this low, this open down here? So does it want to test here before it gets there? What do your rules say? Does it want to test? Let's look at the week. And here we have the previous week close. So this is how it's already closed above the previous week, and it's closed above this week. So you could look at this here. It's another rule you could create, or another way you could start thinking about the market. Does price, and I say price as it's some nebulous thing, but that's the best way to describe what's happening. Does the market want to retest the previous week close before it goes back up? And what does that mean for your stop loss? See, this is where I get a lot of questions around stop losses and stuff, because obviously that's something most people want. Because you're either doing two things. You're either actively managing your trade, or you have a stop loss that's set and that you're just taking out of the market. I actively manage a lot of my trades. I do have stop losses that are protective stops a lot, but I also actively manage a lot of my trades. That's just the way I trade. But in equities, I trade swings. So in equities, I do have fixed stop losses, and I'm taken out of the market. But this is you shouldn't design a system where every time you're looking at a chart, you have to kind of guess what your rules are. Like, you have to kind of guess, how does price want to get there? You shouldn't have a system like that. See, why I created the RexDog system, why I really created its simplicity, is I use various indicators, EMAs, moving averages. I've just added a new one that I'm starting to rely on now. So let me add that, not compare. I'm not going to hijack the video. So let's do the market bias. So this one, I've been starting to rely on a lot. And it's kind of an oscillator, but it's not an oscillator. What it's basically doing is it's taking the RexDog system, and then you can't see it over here, but it actually tells you the amount of short it is. It's 12% short. But as you can see, it's starting to cross some key lines on here, and it's maybe crossing over the 0 line into the green, which means that momentum would be going to long. So and in this oscillator, you're using it in two ways. You're using it to go with momentum, but you're also using it to fade momentum to get in trades early. I mention that because this is also helping me take out some of the guesswork. I should say me. Since I created the system, I don't really need this indicator down here, down below, because obviously I just see it in the chart. But I created this mainly for people that are adopting in the training this indicator to really help them trade better. But I am noticing that it helps me make the decision quicker, because I can simply look at this and say, well, down here, when it's down here at this key level down here, that's a good fade trade, fade long. When it's up here, when it's testing this yellow line, believe it or not, this yellow line is the RexDog average on this oscillator. So when it tests this yellow line, that's a good continue momentum trade, meaning I go short from that area. I mention that because this also answers the question, how does it want to get there? Because I want you to just, we're focusing on that last question, because if you don't have a set way that you define where price is going, you know where it's coming from, but how it wants to get there, you really can't answer the other trading issues, like what's my position size? Because if it wants to get there in 2 or 3 days, or it wants to test a lower level, maybe I scale in here. So for instance, maybe I enter in here at a 1 position, and I'll just use these as positions. Maybe then I enter down here because I'm planning to scale in, but this is the weekly open. And maybe I scale in here, and then maybe I put another entry at the previous week open, because that's part of my trade plan. And given where the market's at right now at this given time, I think there's a probability it might want to test the previous week open. It's already closed above it. Or not, has it? I don't know if the day has. Let's see. Yeah. So, well, yesterday closed right on it. Today it's looking to close above it. We've got 2 more days in the week. So, if you think about this, and let's say this is a swing trade, what is the probability that it wants to retest the previous week open, and then use that as quote unquote support? And is that a good entry probability for you? This is a simple rule. So I mention that because it's when you ground your questions in that. Let me remove this so we're not adding confusion to the chart. When you ground your questions, when you ground your every indicator and your trade system around these 3 questions, it focuses your mind on what you really should be focusing trading on. And anything out of that, anything that adds to the confusion of answering those 3 questions will add to the complexity of your trading. The more you have to think during your active trading, the more mistakes you're going to make, and the more it's going to be confusing on whether or not you should do something, whether or not you should exit, whether or not you should even trade. Just the more complex you make it, the more confusing it will be at all times. And it will never feel like you're actually making forward progress, because you're not trading the system, you're just winging it. You're just trading on a whim. Let's go to the Forex market, and then I'll finish the video. I mentioned this in a previous video. I think I'm looking to go fade long on the CAD. I'm looking for my best entry below this whole range here. But I have started entering a small position just because my trade system says, based on what's happening in the chart, that there's a probability that we're going to get some kind of test at least to the lower ATR band and a potential RDA. Of course, we've got this breakdown candle here, and that's aligning kind of closely with the middle of these 2. So that's the first area that I'd look at. But once again, I guess it's hard for me to, it's not hard for me. What I'm trying to emphasize to someone, especially if you're new or you're struggling or you're having challenges, is that with just this one indicator, let's take this one off here. With just this one indicator on the chart and with just candlesticks, naked candlesticks and a few rules, I could just trade with this and do pretty well. I'd be missing a lot of opportunities. That's why I have other indicators in my trade system, because there's other things there's other momentum checks that the market does. But with just this simple indicator and with some simple candle rules, I could create a pretty effective trade system because I'm answering those three questions. When I look at this, I say, well, it's momentum short. Where does price want to go? Price still is indicating that it wants to go lower, believe it or not, in this chart. It's still indicating that it wants to go lower. But there's also an equal evidence that it actually wants to go up and at least test the ATR band at a minimum. Try to invalidate this candle. That's at a minimum what it wants to try to do. And it might fail there. And in fact, that's a high probability trade. So a short from invalidating this candle is a high probability trade. Right now, in my trade system, other than fade long, which is a trade I'm already in, which is a fade long up here, there's nothing else for me to do. Where's price going? Probability wise, my higher probability is it's going up in my trade system. Where is it coming from? Well, it's coming from this kind of what you could consider a base or whatever you want to call it. It's coming from here. Now that third question is, how does it want to get there? I'm kind of handicapped here because I'm not trading my full system, but let's just go off what's on the chart. Well, I can use simple candle rules, real simple. We've got a level here that's pretty important. We've got a level here that's pretty important. This range here, this kind of range. This level is pretty important. So how price wants to get here? Well, it could just have some kind of Illuminati event that makes the candle move like this candle here, and it moves up here. But if you don't believe in the Illuminati, fine. Well, it's got a level here that it could retest, potentially. It's got a level here that it could retest. Any close below these two levels invalidates a percentage of this move here. A follow-through of a close. So a close is one thing. A follow-through close obviously further invalidates that. So these are just simple rules I can trade off right here. Where would my stop loss be? Let's say I entered right now, just to kind of just give practical examples. Where would my stop loss be? Well, this is the challenge. With Forex, I trade long term. So I trade weeks. I'm not trading like, I don't look at the Forex. I do sometimes swing trade and scalp trade Forex, but I enjoy scalping other markets like crypto and the futures market. I enjoy much more scalping that than I do scalping the Forex market. I just don't enjoy scalping the Forex market. So I would have entries at these levels. I would enter here, I'd enter here, I'd enter here, and then I'd have a stop loss down here, somewhere around here. Because I'm looking for, obviously, my expectation in my trade system is that if it does come down here and come down here, there's going to be some reaction below these lows here. So my stop loss will be down here. It's not going to be in this area. It's not even going to be near this low. It wouldn't even be near this low. I'm just sharing like a practical example. If I was just trading just this raw chart with just the RexDog average and just looking at candles, nothing else, that's, and I don't think this is a high probability trade, because the other challenge with this is like, once again, rules. Okay, I'm going back to rules. Where's price going? We think it's going here or here, at a minimum here. Where is it coming from? It's coming down here. But where are we also at? We're in a terrible area to enter a trade. We are at the middle of a range. That is a range. I'm just using the closes of this level. We could use, if we want to, if we just want to be, we could use the lows and we can use the highs. We're really close to the middle of a range. It's 50-50. Anytime you enter in the middle of a range, unless there's other probabilities on your side, it's a 50-50 trade. It could roll over from here. It could continue up. It's 50-50. Where's our best long entry? Well, down here, we already missed it. Where's our best short entry? Up here, we already missed it. Really, we should not be doing anything at this point in time. Except maybe if we really thought that there was a high probability of an upside move, then we would be fading long, meaning that the momentum is short, we're fading long, we're going long up here, small position size, a participation trade. You missed the best entries, both long and short here. You're in the middle of the range. I don't even need other indicators or anything else to kind of define my risk, to define my stop loss, to define much of that. Time frame, like I said, time is always hard. I've said this before. That's kind of like how does price want to get there? I'm not thinking time. I'm thinking what steps does it want to take to get there? What obstacles does it have in its place to get there? And when you talk about obstacles, when you think about that, this is, I'm not going to throw the RexDog. If I threw the RexDog system in there, I could show you various high probability areas that this would stall. But let's just keep it simple. What obstacles does it have to get up here? Very simple. And these are just simple support and resistance. Every trader looking at the chart can see this. Every algorithm can see this. Doesn't matter. This is data from the market. What obstacle? Oh, it's got a high here. It's got a breach and close above. It's got a high here. It's got to close above. It's got a high here. It's got to close above. It's got another high here. It's got to close above. If we go to the weekly, I'm just giving the obstacles that it has to get there. Those are some weekly highs as well, obviously. So it's got these various obstacles, price obstacles, that it has to overcome to get there. Now, oftentimes, I say an Illuminati event, oftentimes it will just stair-step, reject, stair-step, reject, stair-step, reject, stair-step, reject. But oftentimes the Illuminati, you know, and the lizard people, they just decide that it just wants to rip up. Like I said, I use that as a joke because I literally don't care why it happens, because I just trade my system in probabilities. So a lot of times when you see a lot of upside resistance or even downside resistance, the way that the market deals with that, or however it's dealt with, is it'll rip through it. And it will surprise everybody because you could say, and like I said, I've said before, you don't ask why. You could say, oh, well, there's people that are short and they have their stops here. So every time that a new high is breached, then the stops, they have to cover their shorts, and then it goes up, and then it goes up, and then it goes up. I don't know if that's the case. I don't know if there's liquidity pools here. I don't know any of that stuff. I don't care. I don't need to know. I could trade around that idea and maybe be successful. But I'm just saying that oftentimes when you see a lot of upside challenges that a chart has, one of the way that the chart overcomes that is by ignoring all of them and ripping through it. One of the things that often happens. Doesn't always happen, but something to be mindful of. But what's the bottom line here? Where's price going? We've identified that to our trade system. Where's it coming from? We've identified that. How does it want to get there? Well, we've identified the various obstacles. We've also identified that we're in a really terrible area to enter a trade. We're in the middle of a range. So really, we shouldn't be doing anything here, except for maybe a participation trade. It's that simple. So I share that. Hopefully, you know, I noticed in my bullet points here that I did not cover my bullet points at the same detail that I thought I was going to. But as I got to talking, I think I covered everything that I wanted to provide to someone that, like I started the video. Obviously, if you're a experienced trader, hopefully this is a review and maybe I gave you some ideas to like refine your system and trade better, become even more of an elite trader. If you're just starting out, you've had some challenges, definitely you can click below to join Discord, look at the RexDog system, come to the Discord server, ask questions. But use these 3 questions. Let's go back. We need to go back to the 3 questions just so we end on the actual just so we end on the right thing we need to end on. Where is price going? Where is it coming from? And how does it want to get there? Remember, most people aren't able to answer the time question. What you're thinking about is obstacles. Does it want to go down first? Does it want to go up first? Does it want to test a level first? Does it want to test the daily, the weekly, the previous hour, the previous 5-minute candle, whatever you're trading on? How does it want to get there? Does it want to stair step there? Does it want to rip there? Now, I'm asking you to answer those questions, but what I'm really suggesting you do is that you devise a system that allows you to look at any chart, any time frame, and answer those questions the same way. That's what I'm imploring you to do. Based on where is price going, where is price coming from, and how does it want to get there. If you don't have a repeatable process that you trust and you trade with conviction based on these 3 questions, how can you trade? Because you're guessing. And guessing isn't a great trading system. It's really not. I've yet met a trader. I haven't met like thousands and thousands of traders, but I've yet met a trader that's been successful at just pure guessing. So I've yet heard of one or met one or seen someone that wrote a book, how to guess with trading. Actually, that's probably a book I should write, but that's neither here nor there. These 3 questions should be the foundation of your trading system. I look forward to seeing you in the next video.